Well, hello, my name's Brett Hirsch. I'm an instructor for overnightaccountant.com, and I'd like to welcome you to another one of our 2-minute tax takes. Now, in this 2-minute tax take, we are going to be discussing a question, or answering a question rather, that we received from many homeowners associations, and that question is, does my HOA need to file an income tax return? So, as if you're familiar with our 2-minute tax takes, I need to time myself to see if I can do this in 2 minutes or less. So we are going to start now. The answer is yes. All HOAs must file an income tax return. Kind of depends on the business structure or the structure of your HOA. For example, if you are formally approved as a nonprofit organization, formally approved by the Internal Revenue Service, not that you think you're a nonprofit, not that you file with your state as a nonprofit, formally approved by the IRS, you would file Form 990. If not, you're really considered a corporation for tax purposes by the Internal Revenue Service, and you're supposed to file Form 1120. Sorry, makes no sense. You're supposed to do it unless you qualify to file Form 1120H. And guess what? Most HOAs qualify to file Form 1120H. There's a picture of it. It's a relatively simple form if you're trained in how to prepare it. Membership dues and assessments are not taxed on Form 1120H. However, taxable income is taxed at a 30% rate, 32% if you're a timeshare. Can your HOA file Form 1120H? Yes, if it passes 5 tests. Let's go over the tests real quick. Number 1 is the operations test. That basically means that 85% of the lots and condo units in your HOA are managed by your HOA, and they are intended for residential purposes. They are either used for residential purposes or intended for residential purposes. Income test, that basically means that 60% or more of your income is what we call exempt function income, and that basically is dues and assessments from members for the most part. Expenditure test, test number 3, 90% of the expenses of your HOA are what we call exempt function expenses, and that basically means they are used to manage and maintain HOA property. Test number 4, no private inurement. That basically means your HOA cannot benefit one individual or group of individuals. That basically means that your officers aren't taking money and using it for their own private purposes. That's basically when you run into that issue. Test number 5, final test, election. You need to elect to have IRS Code Section 528 apply for that tax year. Sounds complicated. It's not. You do it by filing your Form 1120H on time. It's really that simple. You pass all 5 tests, guess what?
Oh, Brett, you were so close, but you didn't make it. We'll let it keep going.
You can file Form 1120H. If no, you must file Form 1120. I'm sorry. That's a corporate return. It's complicated. You have any questions? Go to our Overnight Accountant's website where we answer the questions on these 5 tests in more detail. Also, I'd like to invite you, if all of your income and dues of your HOA from membership or from membership dues and assessments, except for interest on savings, and all your expenses are for HOA management, your 1120H is going to be relatively simple. So simple, in fact, that we created a course to help you prepare your own Form 1120H, and that course is called Form 1120H Basics. We invite you to check it out at our website, and we hope to see you there.